You know that feeling when you drive a brand new car off the lot, you've got the keys, that new car smell, and you absolutely need proof of insurance right then. It's instant mandatory,
Right.
part of the deal, yeah. But okay, what about when you buy, say, a piece of vacant land? Seems quiet, untouched. You just picture, I don't know, open space, maybe some trees, nothing really happening there. It doesn't exactly scream high risk, does it? Yet, we're seeing mortgage lenders increasingly demanding a specific type of insurance for it. And this isn't just some quirky new thing. It feels like a real shift. So my question is, why? What's the hidden risk here that's making banks insist on specialized coverage for something that looks so, you know, so harmless?
That's a really great observation. And it points to a fascinating area of liability that honestly many people just overlook. The thinking behind this trend, it isn't just about protecting the land itself,
Right.
or even the dollar value of the loan. It's really about a growing and often kind of unseen exposure to risk. So for this deep dive, our mission, basically, is to give you a crystal clear understanding of these liabilities linked to vacant land that people often ignore. We'll explore exactly why mortgage lenders are so focused now on needing this insurance, what specific dangers actually exist that make it crucial, and ultimately how this specialized protection helps not just the landowner, but importantly, the financial institutions too. We're going to sort of pull back the curtain on the what ifs that genuinely keep lenders up at night and what that means for you if you're thinking about owning vacant property.
Okay, so when a lender gives out money, whether it's for that shiny car, a house, or, yeah, a piece of land, their whole business is minimizing risk. That's obvious, right?
Yeah.
But for vacant land specifically, what kind of non-financial risk are they really trying to avoid? This isn't about the land maybe losing market value.
Mm-hmm.
It sounds like it's something else entirely, something more personal,
Mm-hmm.
more legal. What's really shifted to make this such a pressing concern for them now?
Yeah, this gets us right to the core idea of shared liability, or maybe more accurately, vicarious liability. Let's loop back to your car example for a sec. When a bank finances your car, they're the lien holder, right? They have a legal claim on that car until the loan's paid off.
Right.
So if that car is involved in an accident and there's negligence involved, the bank, because they have that vested interest, can sometimes get pulled into a lawsuit. Well, the same idea applies directly to vacant land. Maybe with less obvious triggers, but the principle holds. When a lender provides that mortgage, they take on a financial interest in the property. So if someone gets hurt or their property gets damaged because of something seen as negligence by the landowner, the bank holding that land can absolutely be swept into the lawsuit that follows.
Mm.
And, we've seen a definite uptick over the last decade or so in these kinds of premises liability lawsuits, especially in rural or undeveloped spots.
Hmm.
It's not just random stories. There's a real legal trend towards holding property owners to a higher standard, even for hidden dangers. The potential cost for lenders in these cases, even if they eventually win, has made them rethink their risk way beyond just market value. So for lenders, making the landowner get liability coverage isn't just, good practice anymore. It's become a necessary shield for their financial stake.
Okay, shared liability. That's the lender's big concern. But what specific kinds of accidents are we actually talking about? Because when I picture vacant land, it's still mostly, open space, trees, maybe some rocks. It doesn't immediately yell danger zone or lawsuit waiting to happen. You said incidents are up, lenders are noticing. What are these common but potentially really bad dangers lurking on empty land?
Yeah, that's a really common thought. And it's exactly where those hidden risks are. It's not about like crazy rare events. The dangers are often everyday things that just go unnoticed or unmanaged precisely because the land is vacant. Think about it, abandoned wells,
Hmm.
maybe old cisterns that aren't marked, dead trees, washed out culverts. These are actually incredibly common on undeveloped land.
Yeah.
Imagine an invited guest could be a friend, family member, even someone looking to buy the place. They're just strolling through the woods on the property. They could easily fall into an old, unmarked well that wasn't filled in right. The injuries from something like that, they could be catastrophic. Spinal damage, broken bones, leading to huge lawsuits asking for damages.
Wow.
Or consider a dead tree, weakened by age, maybe disease, insects. It just stands there until a big storm hits. If that tree comes down, it could smash a neighbor's fence, hit someone on a nearby road, or worse, fall on someone who's allowed to be on your land.
Right, okay.
Then you've got things like washed out culverts or paths that have eroded. They create hidden tripping hazards, especially if they get overgrown. Or they could damage a vehicle if someone tries to drive over them.
Yeah.
And beyond those, we often see dangers like old, discarded farm equipment, maybe abandoned cars.
Oh, yeah.
Yeah, they're not just ugly. They can be what the law calls attractive nuisances for kids, leading to awful accidents. Overgrown areas might hide old junk piles, construction waste, sharp stuff. Even natural things like unfenced ponds or old swimming pools can be serious drowning risks, especially if they attract kids from nearby. These aren't like obscure scenarios. They're real-world hazards that can lead to significant injuries and pretty immediate lawsuits. That's quite a list. It definitely paints a clearer picture of the liability. So it's not just the land's value, but potentially huge legal costs.
Okay, here's where it gets really interesting, maybe a bit counterintuitive. Lots of people might think, okay, I get the natural dangers, walls, trees, fine. But what about old structures on the property? An abandoned barn, an old shed? Aren't those usually excluded from standard vacant land policies? And then there's the really surprising bit, trespassers. I mean, common sense says if someone's there illegally, you're not liable, right? But the legal world isn't always common sense, is it?
You've definitely hit on two critical and often really misunderstood points about vacant land liability. Let's do structures first. You're absolutely right. Most standard vacant land policies will not allow any type of structure on the property. Zero.
Why is that? Well, it's fundamentally about risk, predictability, underwriting. An old barn isn't just a building. It's potentially an attractive nuisance for kids, like we said. It's a fire hazard, it could collapse. Plus, it might hide other dangers inside old machinery, pits, who knows? These things make it super hard for general policies to assess the risk accurately. They much prefer a totally clean slate, a pristine vacant lot. So yeah, a property with even a falling down shed might get disqualified by many standard insurers.
Okay.
But that's not always the reality, is it? Lots of land, especially if it was used before, has these structures. And this is where specialized programs, like the one from the American Hunting Lease Association, AHLA, let's call it, take a different approach. A really key advantage of the AHLA program is that it does allow these structures. And crucially, it specifically ensures liability arising from their use.
Arising from their use. Okay,
Yeah.
how does that work?
Yeah, let me give you an example. Imagine a sudden storm kicks up. An invited guest on your land, maybe a friend out hiking, needs shelter fast. They duck into an old rundown barn. Once they're inside, maybe it's dark, they step on some old piece of farm equipment, fall, and get hurt. Now, even though the barn is old and they were just trying to get out of the rain, they might have a legitimate claim. They could definitely sue the landowner and the bank holding the lien.
Right.
Specialized coverage, like AHLA's, is designed exactly for these kinds of real-world situations.
Okay, that's a big difference then, dealing with how land actually is. But the trespasser thing still feels like a head-scratcher. My gut reaction, and I bet a lot of listeners feel this way, is just they shouldn't have been there. How did the law get to a point where this is even a coverage issue? It feels kind of unfair.
That's a totally understandable reaction. It touches on some complex legal ideas, specifically this thing called duty of care. While, yeah, it might seem unlikely for a trespasser to successfully sue, the reality is they have sued landowners. And in some places, the law actually allows it, especially under ideas like attractive nuisance. For example, if you have an unfenced pond or an easily accessible old building on your vacant land that could foreseeably lure kids onto the property, you might still owe some level of care to prevent them from getting hurt, even though they're technically trespassing.
Okay.
But here's the absolute kicker. Forget whether they win or lose. Regardless of the outcome, the legal fees alone were and still are substantial. Huge.
Just to defend yourself.
Exactly. Even if the case gets thrown out as totally baseless, you, the landowner, and potentially the bank are still stuck with a massive legal bill. This kind of vacant land liability policy would explicitly protect the bank from that exact scenario. It basically insulates them from the huge cost of just defending against that kind of claim. And what's more, this policy carries a really powerful duty to defend clause.
Duty to defend. What does that mean practically?
It's not just legal talk, it's vital. It means the insurance company provides legal representation for the policyholder from the second a claim is made. This duty to defend feature alone could be worth tens of thousands of dollars in lawyer fees and court costs. It's an incredibly valuable layer of protection that many might not realize is even in the policy.
Wow.
And just to clarify, any judgments against the policyholder are still covered by the policy's liability limits. The defense costs don't eat into that payout amount. So this isn't about saying trespassing is okay. It's just a practical acknowledgement that legal fights are incredibly expensive, time-consuming, and stressful, no matter who's technically right.
That's a really powerful point about the defense costs. Even for bogus claims, it really changes the perspective from who's right to who pays the lawyers. So, okay, bringing it back. If someone's looking to buy vacant land, or maybe they already own some, what does all this mean for them? This sounds like it's not just about checking a box for the lender anymore. It's actually about protecting yourself from potentially life-altering financial and legal problems you might not even see coming on your quiet piece of land.
Hmm.
It really shifts from being a bureaucratic hurdle to a vital safety net for your own finances.
Absolutely. If you connect this to the bigger picture for the landowner themselves, this insurance isn't just some hoop the bank makes you jump through. It's a really powerful and practical risk management tool for you. The key benefit is that this type of policy is designed to protect both the landowner and the lien holder.
Both parties.
Yes. For instance, programs like the AHLAs allow the bank or the mortgage lender to be listed right on the policy as an additional insured. Now, what
Mm.
that means, being an additional insured, is the bank gets the same level of protection under that policy as you, the main policyholder.
Ah,
This really aligns everyone's interests, you see. The bank isn't just telling you to cover yourself, they're ensuring their own stake is protected under the very same coverage. And this is particularly important for lenders who specialize in recreational land, lots, farms, that kind of thing. They often direct borrowers specifically to programs like AHLA because they know the coverage is comprehensive.
makes sense.
And they've made the process itself incredibly easy, really convenient. Landowners can usually get a quote for the insurance and buy the whole policy online in just a few minutes.
Leslie, that quick.
Yeah, it's very streamlined. Then the proof of insurance can be emailed directly to everyone who needs it, the landowner, the lender, maybe the title company, literally within minutes of buying the policy. So it removes that potential delay or barrier, making it easy to get this vital protection quickly and efficiently online. It helps meet the lender's rules, sure, but more importantly, it gives you peace of mind. And honestly, the cost of these policies, when you weigh it against, tens or even hundreds of thousands in potential legal fees from just one accident, it's remarkably affordable protection.
This deep dive has really opened my eyes. It shows that vacant definitely doesn't mean risk-free. Uh, from abandoned wells and old barns to the surprising liability around trespassers. The potential for serious legal and financial trouble on vacant land is, well, it's significant and often totally overlooked. It's a really clear example of how these seemingly niche insurance policies actually play a huge role in protecting everyone involved in buying or owning property, not just the obvious players. It truly is about being proactive against those what-ifs that, let's be honest, we rarely think about until something terrible happens.
This raises an important question, I think, for you, the listener, to maybe reflect on. How often do we underestimate the potential liabilities hiding in things that seem, well, totally benign or undeveloped? We tend to focus on the obvious risks in life, don't we? But perhaps the most valuable lesson here is to always question what unseen dangers might be lurking just beneath the surface, even in the quietest corners of a property, and proactively seeking out the knowledge and the protection to navigate those risks. That isn't just about being financially smart. It's really about responsible ownership in what seems to be an increasingly complex and, frankly, litigious world.